Hi, this is Steve Davis over at Total Wealth Academy, and this is a new video series called Learning the Lingo, a glossary of real estate terms. Many people listen to my radio show and don't really understand everything that I say. And the reason is they just don't know the lingo. So we want to solve that with this series so that you can understand the radio show more effectively or understand the classes you take here at Total Wealth Academy much more effectively. And I want to start with a definition of real estate investing. See, a lot of people misunderstand real estate investing. They think that real estate investing is just going out, buying a house at full price, and waiting for it to go up in value, which it does. It doubles in value every 20 years. Problem, 20 years of your life are gone. That's not what we do. That is actually not even real estate investing. It's a thing called speculation. It's just like stocks, mutual funds, gold, silver, crypto. You're buying low to hopefully sell high if the market goes up. It's all guesswork, it's all crystal ball, it's all hoping, and then you know what? It's not if those things are going to crash, it's when. But the good news is, it's not if they're going to recover, it's when. So what you have to do, and I'll pick on stocks, is you look at the average. Did you know that even with the big crashes and even with the highs, the stock market average is 7.5% and has for 75 years? 7.5%. That's what you're going to get, nothing more. People get so excited when it goes up quickly. They think that's going to happen forever. It doesn't, because it comes down. The average is 7.5 for speculators, people in the stock market, and so on. Real estate investing is completely different. We go out and we buy houses generally way below market, 20, 30, 40% below market. The minute we close on that house, our net worth goes up $20, $30, $40, $50, $60,000. Every time we close a deal, our net worth goes up instantly. And we only buy for cash flow. We don't buy anything that doesn't cash flow. This is based off of something that Warren Buffett said 30, 40 years ago. He said, don't ever rely on a sole source of income. Always invest to build a second source of income. See, people misunderstood that, and they went out and bought stocks. They went out and bought gold, silver, crypto. What's the problem? They don't produce cash flow because they're not investments, they're speculation. See, as investors, we buy for cash flow. When we buy a little single family house, it makes us $400 or $500 a month. When we buy an apartment complex, it makes us $20,000 or $30,000 a month. Cash flow. So, the definition or difference is this. Real estate investing makes you money the day you close the deal and it cash flows. Speculation doesn't make you any money the day you close the deal, and it only makes you money if the market goes up. It's guesswork, it's crystal ball BS, it doesn't work, it's ineffective. We are not speculators, we are real estate investors, and I recommend that's what you become as well. Thanks for watching.